Alright, for this video I want to go through an IRS Form 1099 INT for the 2023 calendar year. And in this scenario we're going to look at a taxpayer that has income reported in box 1 for regular interest, and they also have some tax-exempt interest income reported in boxes 8 and 9. So we'll go through the full 1099 here. And we've also got the Form 1040, the federal income tax return for the taxpayer. So we'll go through the full 1040, see how everything gets reported. And this taxpayer here is a resident of Georgia, and they're filing a full year resident Georgia Form 500. And so we'll see how these interest items impact the state return as well. All right, so if we go back to the 1099 here, let's talk about the boxes that are completed. So box 1 is just your regular taxable interest income. So this is interest income earned on checking accounts, savings accounts. If you have a brokerage account, you might earn some regular interest. And so this interest income is generally reported and taxable for both federal and state purposes. All right. Now in boxes 8 and 9, we have tax-exempt interest. So tax-exempt interest in box 8 is generally municipal bond interest, right? So this type of interest is not taxable at the federal level, but it could be taxable at the state level. And then in box 9, private activity bond interest, this is the portion of the box 8 interest that is private activity bonds. And that's important for purposes of AMT. So all the interest is still exempt from federal taxes, but the portion of private activity bond interest requires an adjustment for AMT purposes. Now in this example, we're going to see down here that all of the tax-exempt interest is Florida state municipal bond interest. And that's important because depending on where you live and where you file a state income tax return, some states will tax out-of-state municipal bond interest. And that's what we're going to see in our example here. So if we start with box 1, $25 of regular interest income. So the interest income is reported on Schedule B, and it flows through to page 1 of the 1040. So if I have a look at Schedule B here for interest and ordinary dividends, we can see Part 1 here. We have interest income from the not real U.S. brokerage company totaling $25. Now the $25 is ultimately flowing back to line 2B, so we can see the taxable interest income there of $25. But now let's look at where that tax-exempt interest flows through to. So box 8, tax-exempt interest, $300, and the portion of box 8 that is private activity bond interest is $75. So the tax-exempt interest of $300 is reported directly here on line 2A. So 2A is tax-exempt interest, meaning it's exempt from federal income taxes. So we've got $300 there. And so we'll notice that as you add up all the income items here, the $95,000 and the $25, we have total AGI of $95,025. And this is because it excludes the $300. So $300 of tax-exempt interest is not included in our AGI. Now, the other part of the tax-exempt interest, that private activity bond interest, that is $75 reported in box 9. So the $75 is recorded as an AMT adjustment on Form 6251. So 6251 here for the taxpayer, we report the amount of private activity bond interest on line 2G. And so that ultimately goes into calculating the taxpayer's alternative minimum taxable income. Now, in this fact pattern, the taxpayer doesn't have any AMT. So when the calculation is all said and done, they're not in an AMT position, so they don't have any AMT recorded on line 11. But depending on your circumstances, you might be in AMT because you have other adjustments that are being made as well. So for completeness, we do make sure to account for that private activity bond adjustment, even though the taxpayer doesn't have an AMT liability. All right. Now, if we go back to the 1099, as we've noted here, this is all going to be Florida state municipal bond interest. So all of the interest is, again, it's exempt from federal income taxes, but we might need to adjust depending on where we live for state purposes. So in this example, we have Adam taxpayer who is a Georgia resident, and as a Georgia resident, a Georgia tax resident, the income tax in Georgia is calculated using your federal AGI as the starting point. So $95,025 is our federal AGI, and then we have adjustments up or down based on state to federal tax differences. Some states, use all your income as the starting point. Other states have this kind of presentation, such as Georgia, where we have our federal AGI, and then we have adjustments up or down depending on those other federal to state tax adjustments. In this example here, you can see that our federal AGI, $95,025, which does not include that tax-exempt interest. So because this is Florida interest, we have to have an addition to our Georgia state income for that $300 of tax-exempt interest income. All right, now the Georgia adjustments are reported on Schedule 1, and this flows back to page 2 of that Georgia return. But we can see here, Schedule 1, we have adjustments to income, and on line 1, we have an addition to income, which is attributed to interest on non-Georgia municipal and state bonds. All right, so because this is Florida municipal bond interest, we have to have an adjustment to add back that interest to our federal AGI. And so our Georgia taxable income, our Georgia AGI, is going to be the federal AGI plus that Florida municipal bond interest. So $95,325 is our Georgia adjusted income. Now, if you were a Florida resident or if you live in a state that doesn't have any income taxes, then that's going to be a moot issue for you, right? You're not going to need any federal to state adjustments. But in this case, like a lot of taxpayers, you will be living in a state that has a state income tax, and so you need to be mindful of from what source does this tax-exempt interest come from? Because if this was Georgia interest, then we wouldn't have an adjustment, right? So Adam would be able to exclude this from his Georgia income as well. But in this case, because it is non-Georgia municipal bond interest or state bond interest, we have to have an adjustment from federal to state taxable income. All right, so that covers it for this video. I hope that was helpful. Any questions, feel free to leave a comment below, and I look forward to seeing you on the next video. Thank you.